Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at SanDisk.
If you find our talks useful, please consider subscribe, like, and comment underneath. Okay, so let's just jump right in, because if you've been watching the markets at all this January, you've seen one name just absolutely dominating. We are talking about SanDisk.
It is the story of early 2026. I don't think there's any doubt about that.
And it's not even a story, it's a rocket ship. We're sitting here on Tuesday, January 27th, 2026, and SanDisk has, well, it's basically doubled in less than 4 weeks. Year to date, it is up something like 105%.
Which, yeah, currently makes it the #1 performer in the entire S&P 500.
That's just insane. And if you zoom out a little bit, the numbers get even crazier. I mean, since the spinoff from Western Digital back in February of last year, 2025, the stock is up almost 950%.
It's a 10-bagger in less than a year.
We're seeing it hit new 52-week highs all the time, touching anywhere between 401 and 490, depending on the hour you look. It's volatile, it's aggressive, and it is making people a lot of money. But the big question is it too late?
That's the question.
Have I missed the boat?
And that's a healthy instinct. You see a chart that goes straight up like that, and you immediately think hype. You think, meme stock.
Right.
But what we need to unpack today is that this isn't just sentiment. There is a physical, real-world thing driving this. The world is quite literally running out of NAND flash memory.
Because of AI.
Because of AI. But we have to be specific here. This is not about the storage in your phone. We're talking about high-performance enterprise SSDs. You see, for the last couple of years, the whole story was about compute. NVIDIA GPUs, right?
Yeah, the brains.
The brains. But for an AI model to actually use its brain for inference, that's when it answers your question. It needs to access huge amounts of data instantly.
So you can have the fastest processor in the world, but if it can't remember things fast enough, it's basically useless.
Exactly. It's a bottleneck. So what you have is this massive wave of AI demand hitting a supply shock. And right now, supply just cannot keep up.
Okay, before we get into the bull and bear cases, just a quick reminder for everyone listening. If you want to get these kinds of insights every day, hit that subscribe button. We're here to simplify this whole wealth building journey for you. So let's talk about why everyone is piling into this stock.
Well, the bull case is really built on 3 legs. You've got the financials, what I'm calling the spin-off unlock, and then the actual competitive moat.
Let's start with those financials, because the Q1 2026 numbers were, they were a wake-up call for Wall Street.
Oh, they caught everyone completely flat-footed. So SanDisk reported revenue of $2.31 billion. That's up over 22% year over year. But that's not even the headline.
No.
The real story was the earnings per share, the EPS.
The estimates, the consensus was around, what, 58 cents?
58 cents. And SanDisk came in at $1.22.
That is a massive beat. That's not a small surprise.
Oh, it's a nearly 60% beat. You just don't see that in large cap stocks. It tells you that the analysts were fundamentally wrong about the pricing power SanDisk has right now.
They could charge more, and customers just paid it.
You had paid it, which ties into your second point, the spinoff. For so long, SanDisk was just, buried inside Western Digital, a conglomerate.
Right, and the market hates conglomerates. It's like you're dragging dead weight around.
Exactly. They get a discount.
Yeah.
So Western Digital spins it off, lets it be a pure-play memory company, and now we're seeing that unlock.
It's like taking ankle weights off a sprinter. You finally see how fast they can actually go.
It's a perfect analogy. The market is finally valuing it for what it is, right in the middle of a memory supercycle with no other business units muddying the water.
But it's not just any memory, right? This is where the competitive moat comes in, something called by CS8.
Right. By CS8. It's where we get a little technical, but it's really important for the stock price. It's their latest generation of 3D NAND technology.
Okay, break that down. 3D NAND, explain it like I'm 5. Why do I care?
Think of a parking lot. Old memory is a flat, single-level parking lot. You can only fit so many cars or data bits, right?
Right, you run out of space.
3D NAND is like building a skyscraper parking garage on that same piece of land. You're stacking memory cells vertically.
So you get way, way more storage in the same physical space.
Way more density and speed.
Yeah.
And for a data center running OpenAI models where space and power are everything, they need that skyscraper. And because of this tech and the general shortage, competitors like Samsung are raising their prices by 20% or more.
And SanDisk just gets to ride that wave. They just changed the price tag on the chips they're already making.
Which is precisely why their gross margins are so strong at almost 28%. That's pricing power. And when you have that in a shortage, that's the recipe for huge profits.
And you see the analysts just scrambling to keep up. I was looking this morning. Bernstein is now at 580 for a price target. Citi's at 490.
Zacks listed it as the bull of the day. It's a classic chase. The stock runs, they upgrade, the stock runs more. It's a virtuous cycle.
But, and there is always a but, a stock doubling in 3 weeks that just sets off all my alarm bells. You have to look at the other side. So let's pivot. What's the lowdown? What's the bear case?
The bear case. It really starts with vertigo. You're up 948% since the spinoff. That is a parabolic move. And when you look at the PE ratio, it looks, well, terrifying.
I saw trailing PE of over 1,000. That sounds like 1999 all over again.
It does. And to be fair, that trailing number is a bit distorted by old losses. But even the forward PE, which is based on future profits, it means the stock is basically priced for perfection.
And being priced for perfection is a scary place to be.
It's the most dangerous place. It means the stock price right now assumes nothing will go wrong. It assumes earnings will be amazing, guidance will be flawless, and if they miss by just a penny,
the stock could get cut in half. Because all that good news is already in the price.
It's already baked in.
Yeah.
And we have to remember the history here. Memory is, well, it's famously cyclical, a boom and bust business. They call it the hog cycle.
The hog cycle. Okay, unpack that for us.
It's a classic economics idea. Let's say the price of bacon goes way up, so farmers see those high prices and think, I should breed more pigs.
Makes sense.
But it takes time for pigs to grow up.
Right.
By the time all those new pigs from all those farmers hit the market at the same time, there's a glut. Supply is way bigger than demand, and the price crashes.
And memory works the same way.
Identically. Prices are high, so SanDisk, Samsung, they all decide to build new factories. But those take a couple of years to build. Then they all come online at once, flood the market with chips, and prices just collapse.
So right now we're in the bacon boom.
We're in a massive boom. The bear case is that you might be buying at the absolute top just before supply catches up. And it always catches up.
It feels like a distinct possibility. And you mentioned there's another factor here, the short squeeze.
Yes. This is a technical thing, but it's adding fuel to the fire. So short sellers, the people betting the stock will go down, have reportedly lost about $3 billion on this run.
Wow.
So as the stock goes up, they're forced to buy shares to close their position and stop the bleeding. That forced buying pushes the price up even more. It's artificial demand.
And once all those shorts are gone,
that buying pressure just disappears overnight.
That's a really sobering thought. I mean, and there are execution risks too, right? This is still a new independent company.
Right. A new board with 7 new directors. They're still finding their footing. If they stumble at all at this valuation, the market will be absolutely ruthless.
Okay. So massive growth story versus a terrifying valuation and this risk of a cyclical crash. Which brings us to Thursday, January 29th, earnings day.
This is it, the main event.
This is the Super Bowl for SanDisk. If you own it, if you're thinking about it, Thursday is everything. What do we watch for?
Okay, so first, the headline numbers. The official street consensus is for an EPS of $3.18.
Which is already a huge jump from $1.22 last quarter.
It is. But here's where it gets really dangerous. We have to talk about the whisper numbers.
The whisper numbers. For anyone listening who doesn't know, break that down.
So the consensus is what's officially published. The whisper number is what the traders and hedge funds are actually, betting on. It's the rumor, the unofficial expectation. And for SanDisk, those whisper numbers are way, way higher than consensus.
How much higher are we talking?
I've seen some analysts like at Cantor Fitzgerald speculating about numbers as high as $10 to $12 for EPS.
Wait, hold on. $10 to $12 when the official number is 3.
It's an enormous gap. The theory is that the pricing power from the shortage is so extreme that the official estimates are just lagging way behind reality.
But that creates a trap. Because if SanDisk reports, say, $5 a share,
which would be a gigantic beat versus the official $3.18.
But the stock could still sell off.
Exactly. It could tank. Because a whisper was 10. The market might look at $5 and go, that's it. That's the danger here. Good news might not be good enough.
That's wild. Okay, so beyond that number, what else?
Guidance. It's all about guidance. What do they say about Q3? About the rest of 2026? Do they see this shortage lasting into 2027?
If they even hint that supply is catching up, the stock gets crushed.
Correct. We also want to hear specifics on enterprise SSD pricing. Are the margins expanding even further?
I'm also watching institutional flows. RWC Asset Management bought 61,000 shares. Are the big funds adding, or are they selling into the strength?
Absolutely. And then there's the long shot catalyst, that rumor about NVIDIA's next platform, Vera Rubin.
Right.
The speculation is that it will require even higher performance NAND. If they mention Vera Rubin or any kind of next-gen GPU partnership on the call, that's pure rocket fuel.
Okay, so we have the layout. Huge run, huge expectations, huge event on Thursday. So let's wrap this. Final verdict, put a number on it.
I'm giving this a bullish score of 9 out of 10.
A 9. Really? Even with the valuation, the risk of the cycle turning?
Even with all of that. And here's why. The shortage is real. This isn't a company losing money on a dream. They're printing cash. And the AI world fundamentally needs what they sell.
But the valuation...
Look at it on a price-to-sales basis. It's trading around 7 times sales, which, yes, is expensive. But compared to other AI darlings, some software names trade at 20 or 30 times sales.
That's a very fair point. Compared to NVIDIA or Palantir, 7 times sales doesn't sound quite so crazy.
Right. The tailwinds are multi-year. The stock price feels like the 9th inning, but the actual business cycle might only be in the 3rd or 4th.
So the elevator pitch is AI needs chips. We all know that. But it also needs storage, and SanDisk is a pure play on that. They have the tech, the pricing power, and the momentum.
That's it in a nutshell.
Okay, I want to leave you with one final thought before Thursday. We always hear that AI is the new gold rush, and the saying is you should sell shovels in a gold rush.
Or build the barrels for the new oil.
Exactly. If data is the new oil, SanDisk builds the barrels. But ask yourself this. In a gold rush, everyone needs shovels until the gold runs out. Or until everyone already owns a shovel.
The cycle always turns.
Do you really want to own the barrel maker when the price of oil finally stabilizes? It's a fantastic business right now, but you are taking on that cycle risk for the reward.
It's going to be a very interesting week.
That is the lowdown on SanDisk. We will be back right after the report on Thursday to break down what actually happened, so make sure you are subscribed. Thanks for listening to Smart Wealth with Joshua. We'll see you next time.